$48 trillion of market cap to compete after. Most people say, oh, add venture capital. No. This is about risk minimization.
What if the traction is outrageous, but the ethics are not great?
That's a clear no. Most regulation is not done for the benefit of the consumer. Most regulation is done for the benefit of the incumbent businesses that don't want competitors.
Where do you think the world is going right now?
There's an arc to history, and it's moving forward toward progress. And I believe that so strongly. I think we are in an unprecedented age of abundance. Not for everybody yet, but we're going to get there. The best time to be alive is right now, right here.
Hey everyone, sitting here in Blumberg Capital's office with David Blumberg. Welcome to the Playbook Podcast. Super excited for you to be here.
So good to have you here, Michael.
Thanks for hosting us. What a gorgeous space you have.
We try not to be boring.
Where are we right now?
We are in Sunny Isles. We're on the 12th floor overlooking the gorgeous turquoise sapphire Atlantic Ocean. It is a beautiful, puffy, cloud, clear day in Miami. And we're very blessed and lucky and grateful to be here.
This is one of my favorite offices. I don't work at Blumberg. I'm friends with you guys, but I would take founders to the pitch meeting and go to the ocean and just dip right afterwards and dip in the mikvah and just get after it. But gorgeous, gorgeous space, gorgeous art, and really a great firm to be talking to and a great investor. So I'd love to kick it off and maybe have you introduce yourself.
Sure.
There's a nice history here, but maybe take it away. Who's David? What are you up to? And what's going on?
All right, I'll do two things. I'll do first David and then our firm.
Good.
I grew up in a small town called Fresno, California. It's grown a lot since I was a kid, but it was sort of an agribusiness hub in the Central Valley of California. Not fancy, very middle class, nice people, very diverse. I grew up, without a chip on my shoulder and without a, silver spoon in my mouth. So it was a good basic way to grow up. Boy Scouts and community and school sports and team activities and things like that. My parents are wonderful. I have two wonderful sisters. And then I went off to Harvard for college. At the time, I was very idealistic about thinking that government solves the big problems because this was right after Watergate and everyone was sort of depressed. And I was always orthogonal thinker. I've always been if they're going that way, I'm going to go that way. And so when everyone was depressed about Watergate, I was like, oh, this is the time to adopt the Kennedy attitude. Ask not what your country can do for you, but what I can do for my country. And so I went off to Harvard and studied international relations and thought I'd work in government doing trade negotiations or maybe be an elected official someday. And I worked 3 summers in Washington. And at the end of the 3 summers, I was like, oh my goodness, this is the place that causes the problems, not solves them. And I hate to be disappointing and disillusioning to people, but I found it very disappointing, frankly. Even if their intentions are good, the government is oriented toward linear thinking. And in venture capital, you know this as an entrepreneur, the world is very nonlinear in many ways, especially in the technology domain. Correct. And things change with unexpected consequences. And so these policies, just pick one, Social Security, designed when people retired at 65 and died at 67. And we had way more workers than we had retirees. When the demographics change, the whole thing gets messed up. And yet it's so difficult to change things in Washington that you can't change those policies. So we get dysfunctional and unintended consequences that are often worse than the problem they were trying to solve in the first place. So I had the good fortune of being, again, middle-class kid. I had to put myself through Harvard, partly on scholarships, partly on student loans, and partly on working. And I started a division of Harvard student agencies called Harvard Distribution Services, and that is still running to this day. Cool. And it employed lots of my friends, and I was making money, and there's that wonderful feeling you get as an entrepreneur when you are getting that feedback loop of the customer asks you to do something, you organize and deliver this service, it works, they're happy, and they pay you. And if you screw up, you hear about that too. So the feedback loop is very quick, and that I love that affirmation of doing things that help serve other people. So that led me to say, hey, I think I need to do an entrepreneurial life, not a Washington policy guy life. But I loved economics, I loved international relations, so I thought, I've learned that I want to be an owner, because being an owner really allows you to get equity, and equity is compounding your growth value, not just what you earn as a wage, but the growth of the company as an owner is really key to gaining true financial freedom. So I figured out, I didn't know what it was called, but that I wanted to not be in one company for my whole career and get a gold watch after 40 years, I thought, I want to be an owner, but have a lot of different eggs in the basket, have a portfolio. And that turns out to be what venture capital is. We take a lot of bets, a lot of shots on goal. Sometimes we score, big time. Sometimes we have small, double, single, and sometimes we strike out. But if you do enough shots and you back enough great people, great entrepreneurs, you get some wonderful winners, and the rest is just gravy. And so I've had this amazing, lucky career that has been mostly about people. Our team here is awesome. Blumberg Capital.
I know a lot of them. They're very great people.
We're in 4 places. We're here headquartered in Miami. We have San Francisco, big office, New York, and Tel Aviv. And those are not random choices. Those are places where the entrepreneurs tend to congregate. And we are following the entrepreneurs. We take our lead from the entrepreneurs. VC I often describe as being the honeybees. We're out there fertilizing flowers and letting them flower and them fruit and deliver the ripe returns of the day. But our idea is to build a good portfolio that is diverse, and it is got something that'll work in this kind of an economic environment and something else that'll work in that kind of economic environment, because all sectors of the economy don't always do well at the same time, as you well know. So that's a little bit about Blumberg Capital. Our specialty has been business-to-business software for decades. These days, we're really all about agentic AI, and hope we'll talk more about that. The exciting part of agentic AI is that it is not just giving you an answer that people might get from a ChatGPT or an interaction with an Anthropic or anybody else of those big foundation models. The agentic part is the automation of a complex set of processes, workflow automation. And there, everybody benefits, as far as we can tell. It is this unprecedented gain of productivity function that will help us. And I try to make the analogy that, in the 18th century, 17th century, everybody farmed with a plow and maybe a horse and an ox, if you were lucky, rich enough. But a lot of people did everything by hand. And life was tough and kind of hard scrabble and often miserable. You were dependent on the weather. And then there was the invention of the industrial revolution of harvesters and tractors. And that has changed our lives so dramatically. But most of us live in urban settings. We have no idea. I grew up in Fresno, which is sort of a farm place. So I had that sense of how farming had changed. And we're about to go through that revolution with AI. And why is it more important? Because the 87% of Americans and most industrialized countries work in the services business. And when we apply AI, it's not just about communication. That was the revolution of the mobile phone and the internet of communication. This is about knowledge. It's about ultimately wisdom and making good decisions. That's what is so exciting about the agentic AI revolution, and that's where we're focused today and making most of our investments at very early stage companies.
Amazing. Lovely background, and as a Washingtonian from the Beltway, I totally resonate with finding ways to actually move the needle and get stuff done. And I think that's through free market capitalism and the private sector.
Amen to that.
Is my take, so that's why I also left the Beltway. Okay, so let's just jump into it. We'll talk about AI agents. Let's talk about this market that's going on right now. I think I saw 2 things. One, Elon posted on Twitter this morning about how the federal government needs to come in with high income to give those that are displaced with jobs a UBI type of concept. Anthropic is raising at these crazy, let's see, could be $1 trillion company or enterprise one day. What's going on in the value creation side of this agentic economy, and where are you spending more of your time digging in?
Let me first give a context to the audience about how big this opportunity is as we see it.
Please.
And my colleagues have come up with a very interesting analytical framework. So here goes. The average American company spends about $170,000 a year per employee in a sort of a white collar, say an insurance business or brokerage or real estate or law or something like that. Now, $160,000 of that is spent on the wages and benefits for that person. $10,000 is spent on the software they use every day. So it's Microsoft Office, it's Oracle servers, it's Amazon Cloud, it's et cetera, et cetera. The entire software industry, if you take the market capitalization of those companies competing for that $10,000 per year per employee of an average Fortune 500, is about $16 trillion. Okay. Now, McKinsey and other great organizations, Gartner and Goldman Sachs and others, have come out with estimates on the productivity gain from agentic AI implementation, which is happening very fast. Next 10 years will be very different from the last 10 years. They estimate that 57% of the work hours of cutting and pasting, of drudgery, of moving this spreadsheet to that spreadsheet, of normalizing the numbers, of changing the fonts, of changing the formats, of translating from one language to another, all that stuff can be done better by agentic bots, software bots, with a very intelligent application of process engineering. If you take that 57, it's equivalent to about 90,000 out of that 160, right? So if you take that and even squish that down times by a third, by 2/3, you'd still get 30,000 per employee, which would be $48 trillion of market cap to compete after.
That's the math.
So the TAM of the agentic AI space is massive. Now, you can't also sit on your laurels and say, oh, I'll just stick with my basic existing software companies, because those are going to be disrupted, many of them, not all, but many. The ones we feel are most at risk are the ones that are mainly serving as a very elegant, beautiful, easy-to-use user interface.
Yep.
If instead, which we're looking for, you have proprietary data sets, or you have a proprietary model, and I'll go to models in a moment, but let's say with data, or you can evolve the data set with your customers, and that grows in value, then you're building a data moat that is sustainable in many cases. Let me address the issue of the models. Most people are just very consumed with the large learning models right now that OpenAI, Anthropic, Claude, Google, Meta, the others are doing. And that's great.
And the Chinese models.
And then there's DeepMind and so on. Not DeepMind, DeepSeek.
DeepSeek, yeah.
The battle there is among these giants. It's very hard to compete with them now as a startup to build your own LLM. And they will become commoditized, in my view, partly because the data that they're running on is commoditized. And they're doing what's called a sequential algorithm. What's the next word that follows? So I'll test you. You can see if you're as good as AI. To be or not to
be.
You
that
win.
is the question.
You win. You are an AI.
I'm not for hire, Dario, at Anthropic.
Brainiac. So, but there are many other kinds of problems that don't fit that exact paradigm. So a lot of the physical world, the IoT, the Internet of Things, or mining, biology, chemistry, physics, those have different models. So those are large quantitative models. We like those because they almost always come attached to proprietary data sets.
This is a very important point that I'm glad that you brought up large quantitative models, LQMs, in this way that are the large LLM providers able to work with structured data? Are they able to work with math? Are they able to work with new data, esoteric mining data or agricultural data that they just don't have? Everything's on the internet, right? We can commoditize that.
Well, not everything is on the internet.
Not everything.
Certain
medical
data
journals.
Sets, if I own a factory and I have my way of mixing concrete, it might be proprietary and different from the way other people do. And maybe I'm using a bad example, but I'll give you one from our portfolio. We have a company called Verai, V-E-R-A-I.
V-E-R-A-I.
Yeah, and I think it was with a dash perhaps on the website. And they are helping with critical minerals, not only lithium and cobalt and things like that, but gold and silver and copper, because you've seen the price rise in those. And that's probably not going away. The demand for metals is very, very strong and seems very sustainable. But finding them is getting harder and harder. What Verai does is it uses very complicated algorithms that are proprietary and data that is both proprietary and open source. The open source comes from groups like US Geological Survey and the Peruvian equivalent and the Canadian equivalent and Australian and so on. But then they have their own proprietary data that they get from the mining partners. These are exploration and production guys that are running around, very risky business, to try and drill a bunch of holes, especially in what's called covered terrain, and find where you're going to hit pay dirt for copper, gold, whatever. Because traditionally, those metals were found in veins of quartz, in outcroppings of rock. But what if you're trying to find it over a valley or under a forest? Much harder, more expensive, and more environmentally destructive. So Verai comes in and says, instead of drilling 1,000 holes, sort of not almost randomly, like by meter, we're going to give you these 10 holes because it's based on the magnetic sensor data we're getting and the gravimetric sensor data we're getting, combined with all that we know from the U.S. Geological Survey data, we can pinpoint, and they can reduce by 2 orders of magnitude the number of holes that are needed. So recently in northern Canada, they did, instead of 1,000 holes under a big forest, they did 10, and under 7 of them, they found commercial grade copper concentrated enough to make it worthwhile. So that's the kind of thing where that is not going to be done by the large language models.
No forward deployed engineer is going to be able to figure out that.
Well, you might need some of that because to mix the data science with the geology, you probably need some people who are specialists. And so there's room for people, and there's room for, frankly, prompt engineers. There's a whole bunch of new kinds of jobs that will be created. So I'm not with Elon on the giving away.
I'm also not with Elon. I love Elon, but
I'm not with him on many things. On that idea of the
money back for.
Yeah, here's why. Elon, I love you. You're amazing. You're a international treasure. We need you. Godspeed and go forth and conquer and do more. However, there's something about work that's not just about money. And you know this, Elon. You're one of the hardest working people in the world. But work is also ennobling. It gives meaning. It gives dignity. And our family just came back from a trip to Japan. In Japan, I wish I could say it in Japanese. Maybe Steve Mock, who's here, speaks Japanese, can tell me the word. There's a word in Japanese about the pride and the concentrated conscientiousness that a person brings to their job, even if they're a street sweeper. In Japan, the street sweepers are trying to be the best street sweeper they can be. And they take so much pride in their job, and it shows. It's a beautiful thing. So there's no job that's indecent. Every job is worthwhile, and every job has meaning and dignity and should give that feeling to the person who does the work.
I'm 100% with you, and we'll see what happens. It's going to be an interesting, 6-12 months. We're filming this middle of April, about a week or two after Passover, so the world changes day by day. Let's go back in time a little bit. Let's talk about the origins of your firm and kind of the early days, and maybe just structurally how the firm's evolved over the years, or I think 2015 and 2026 are very different moments.
Well, I'll just give my academic background, because my background did not lead me to necessarily be, that guy should be a VC.
Yeah, tell how you got into investing.
I went to Harvard, and I studied international relations and economics. So I had good frameworks, I think, for understanding how the world really works. If you don't understand economics, you're going to be very bad at policy. If you don't understand policy, a lot of the economics and politics, the economics won't really work, because not everything gets implemented as intended. So that combination is very helpful.
We'll see about the grocery stores in Manhattan.
Right, I'm doubtful, dubious. The thing that I did next was work at Rowe Price. I was hired by Abby Joseph Cohen, who's an amazing person, a brilliant market expert. She was the queen of Wall Street at Goldman Sachs for decades. But at Rowe Price, I was investigating up-and-coming pre-IPO companies of the day. This is many years ago. And I had to figure out a portfolio, look at 5 or 6 of the new upcomers in some new technology field, and pick 2 or 3 that T. Rowe should go in long only, long term, which is very similar mindset to what a VC does. We're long only, we don't short companies, we don't short stocks, and we are long-term holders. 5, 10 years is not unusual. So that was great training, and I was flown all over the country, went to technology conferences, got to interview the C-suites of big companies like Intel and National Semiconductor at the time, and all these other ones. So great training. Then I went to Stanford for business school, which helped a lot. And I already knew at T. Rowe that I eventually wanted to become a venture capitalist. By then, I had figured out who these players were. There were very few. This was a tiny industry at the time. There were about maybe 20 firms in venture capital.
So at GSB, it wasn't like the hot job du jour?
No. In fact, my year, when we graduated, 85, was the first year that any number of people got into venture directly. There were 5 of us.
Wow.
And all have done very well. That was a good crop, a good cohort.
Good batch.
of folks. And the firm that I then worked for was Adler and Company. Fred Adler, not so well known now, but in his day, he was one of the top 5. He was international, which was very rare at that time. Most venture was very localized to Palo Alto or maybe New York City. And he was in Canada, he was in the US, he was in Israel, he was in Europe. And so I got to do a lot of that and got international experience. And then I was hired by Alan Patrikoff, another amazing investor who's still investing as a venture capitalist.
I see him at New York Tech events.
In his 90s, he's awesome. And then I went to work for a family office, the Bronfmans in Montreal. Sure. Charles Bronfman, wonderful human being, dignified philanthropist and investor. And so did a lot of work there, and then went back to California. I was in Montreal for Charles, and I went back to Montreal. I went back to California because that's where the tech boom was happening. And one of the first companies I got involved with was Checkpoint Software.
Sure.
Where I actually went in as an operator, and I was the number 4 executive. I was on a contracting basis, but I was the point person in the valley doing the marketing, the PR, the sales, the training, whatever it was that was not technical development. And that was the dawn of the internet. Super exciting time to be alive, and I feel that same way again. This is another very exciting time to be alive, especially if you're an entrepreneur or an investor in these companies, because you see such velocity. The change delta is amazing. That function of like rapid acceleration, you could feel it. So that was exciting then. And just do a quick riff on how the waves of venture capital interests have changed. In the first days, when I was working for Adler in the 80s, 90s, the big thing then was semiconductors, the hardware basic part of the pyramid. I'm going to go climb up the pyramid with you over time. So that was semiconductor.
Fairchild Semiconductor.
Fabrication. Those were already big capital intensive. So we were more investing in new design tools, testing equipment, but a lot of hardware.
Interesting.
And it was a very different, it was all B2B. There was nothing to the consumer at that point at all. And these were big, clunky, heavy kind of investment style things, but very exciting and very technical. Okay, then the next evolution really came with client server, and then that led to really the cloud. And that was a huge revolution, because then you could really have just software-only companies. In between, we had to sell systems,
right,
hardware and software together, and each configuration for a customer was different. When you were selling to Weyerhaeuser, it was very different than selling to Boeing, even though they were both in Seattle. That had nothing to do with it. They needed totally different things. So that we went from, again, hardware infrastructure, the basic chips and all the components, the PC boards, then to the systems, big complicated hardware and software systems, and then to more client server, more emphasis on software, and then the cloud made pure software companies viable. And that's been for now decades. And now we're starting to see this new evolution of the AI world, and where the software is writing itself. You probably know this, but the last version, I think 5.3 of GPT and 4.6 of Anthropic, that new version was mostly written by itself. So we're getting this self-replicating or self-creation mode. There's probably a new word for that.
I think it's called token maxing.
Okay.
I think we're trying to token max now. But yeah, it's a whole new world. So on evaluating companies, because companies are very different now, has the evaluation criteria, the stringency, the discipline, the speed changed into how your firm and your investment team makes decisions now that we have AI? Because the AI companies are moving so fast. Does that mean you move faster?
Yeah.
You obviously have a prepared mind, right? So I think you guys know what you're looking for, but when you think about like your 6 T's in practice, I think the 6 T's for David, maybe I'll repeat, is theme, team, technology, terrain, and terms. Has that evolved over time?
Yes, I'm going to go to that in a moment.
Sure.
Hold the 6 T's in your mind.
Great.
And I'm going to change the order a little bit. But I want to go to the issue of what we were investing in before and why it's changed now. In the earlier days, we were really investing in the scarcity of infrastructure. There were not a lot of competitors. There were not a lot of trained executives for early stage growth companies. Most people at those days were either professionals or they worked in big corporations, or they were small business people. There was not this cadre of people who have been through startups.
Right.
They really didn't exist. So just take that as one basic. So there was infrastructure scarcity. Now we're investing in more capacity and velocity. And that velocity is what I think you're starting to talk about with the, what do you call it, token maxing?
Token maxing.
As long as it's not looks maxing.
No. We're not doing looks maxing. We're doing token maxing. And this is real. This is not AI. We're not avatars. This is actually us. This is not a clone.
Nice jacket, by the way.
Thank you. It's beautiful. Thank you.
And so
It's David's.
we are investing in this accelerating world that is changing in real time. So I'm going to go now to the 6 T's. And I'll jump out of order. Terrain is a T word for market conditions. What is the market landscape? And why do we say terrain? Well, because it's usually contoured. In Miami, it's pretty flat. But in California, you've got hills and valleys and different things. Most places in the world are varied. And what we're saying is that you shouldn't look at the photo snapshot of your marketplace because it's going to change. It's probably changing underneath your feet. So look at the video. What's happening? Where's it going? Let's do this, the Gretzky thing. Let's skate to where the puck is going to be.
Right.
So we want to know, because if we're investing in year 0, and we're going to have an exit with you maybe in year 7, 8, 9, how is the market going to evolve in those years? And it's hard. Nobody has a crystal ball, but you can make some educated guesses, and then you course correct over time. And if you make an airplane analogy, you have a course that you're flying on, and maybe the winds pick up, and you got to tilt it back certain degrees to get to your destination. So this is the idea. We are looking for people who understand the market that they're attacking. Now let's start with the first T, the theme. What is the project? What is the problem you're solving? Why are you going to serve your fellow human beings well? And that's the whole point of capitalism. It's not about making money and being greedy and selfish and having a Lamborghini. It's about serving other people, because profit is a sign that you've served your fellow human being doing something that they couldn't or wouldn't do themselves.
Amen.
If we were just, self-sufficient, everyone would grow their own food and they would build their own car and they would build their own house and be their own doctor, be their own lawyer. That doesn't work. We have to specialize and trade services. So the fact that you deliver something to someone else, whether it's a product or a service, shows you're serving other people. And that's a beautiful thing. It comes from Walter Williams, a recent economist who recently passed away, but brilliant man. Watch every one of his videos, Walter Williams. So that theme is we want to see that this is a big problem. You're going to solve a lot of people's issues, and you're going to be rewarded for it. Then the team. Who is doing this? Why are you the right entrepreneurial team? And if it's you solo, tough. No man is an island, and also, generally it takes a village, and we can cite a lot of cliches, but we find that the best teams are teams. So come with a couple people, 2 or 3, maybe one's technology, one's market, one's finance, whatever, the 3 of you come together. That's a team. We're looking for people with domain expertise. Grit is the undervalued part of the equation. If you have grit and determination, you can overcome so many obstacles. I don't know any successful entrepreneurs without grit. Some with grit still get whacked along the way, but you need grit and determination, persistence. Okay, we also have a high bar for ethics. Unfortunately, there are bad apples in every crate. We love entrepreneurs, but some people stretch the truth. They bend it to the point of breaking. That is not good for you. It's not good for your team. It's not generally going to be good for your company. So keep the bar high there. Number 3, I would say, prove that you know something that other people don't. Right. Why are you going to be successful? Because generally problems are known and just not yet solvable. But why have you found a solution? So that's the team. Then there's the I like to go to terrain, so we'll say we just talked about that. How is it changing and I'll give you specific things. There are 2 kinds of charts we like to see. A Harvey ball chart, you can go look that up. It's a chart that looks basically competitor on one axis and the product features across the other axis. And you fill in the balls full, quarter, 3/4, half, or 0. And that's to show how strong you are in that category, right, or your competitors.
25%, 50%, 75%, 100% fully competitive.
Yes.
Or fully better.
And then there's also a spider chart, a spider web chart, which shows you that your strengths in different dimensions, your price, which is not a great thing, but your speed, your fidelity, your security, whatever the different characteristics of that product are. Let's see that. So those are a couple charts we like to see that shows you your competitors and you're humble enough to admit where you're weaker and need to be stronger and so on. Okay, then that's the terrain. Then let's get to technology, and I'm putting it 4th. It's not the most important thing. Most engineering teams, and we work with almost all engineering teams, they start with technology. We have the best product and da-da-da-da. Wait a minute. Talk about the benefits to the customer. Serve your fellow human being. That's what we need to know first.
Totally.
Okay, so that is the technology. How does it work? Sometimes there are patents, not so much these days, but if there are, fine, show us. But mostly, why is your technical team going to continue winning? How do you build a sustainable moat? Is it your data that you have now, which is a very important part? Is it that you have the best programmers in the world? Well, that may be eroding because now technology may be able to outcompete some of even the best coders. So that could be a changing model, but we want to know how your technology works and why it's going to last from a competitor who says, oh, great idea, let me copy it. Next, after that, we talked about is technology, then it's traction or timing. And that is, where are you in the journey? Are you a raw startup with no employees, no product, no business plan? And we've backed people like that. They were just so good.
Have to.
And we helped them build their business model and their plan and focus on the market and brought team members to them and so on. But where are you in that journey? Of course, the venture capital business is about risk minimization. It's not about adventure. Most people say, oh, adventure capital. No. This is about risk minimization. We want to take a bet on you, but we want to minimize the risks you're going to face as an entrepreneur going forward, and we're going to face as investors going forward. And remember, when we invest, we're almost always the first investor, but we're generally not the last. There are a lot of rounds to follow, and both you, the entrepreneur, and we want to avoid, as much as possible, being diluted by lots of more money coming on top of us and letting us have very, very little of the pie that's left.
In your leading rounds, typically?
We typically lead, but we're not dogmatic. We're happy to share. I think we work well with others. We like a lot of other VCs and strategics and angels. We like all the above. This whole community is so wonderful. We are blessed to be an entrepreneur community because there's a lot of karma. People throw stuff out on the water and let it float back and help each other, and a lot of community events. And you do this marvelously here in Miami. I mean, kudos to you. You do this better than most everybody that I know.
Thank you very much.
He throws these wonderful dinners where you get founders and investors together. It's exceptional.
Thank you. Hopefully AI won't replace me there.
Oh, no. People will not be replaced by AI. Some tasks of many people will be replaced. Thank goodness. We don't want to go back to the 18th century where we all had to plow the field and put in the potato seeds. We want to be able to, grow in productivity, because that's the only way the world gets richer. And, we are sitting in beautiful Miami, a lot of people very well off. There are 700 million people on Earth with zero electricity.
Yeah.
4 billion people have less electricity than 4 hours a day. So there's a lot of wealth that needs to be created, especially in other parts of the world. All right, back to the last one. We talked about the traction, where you are in the journey, and the more you can de-risk, the better valuation you'll get, the easier it will be to be funded. So if you can show, we've already got customers, we've already got some product, we've already got second customers, feedback that they're buying it again, that's all to your advantage, both on valuation and on ease of funding. And then the last one is terms. How much money is this project going to take, at least at the first stage? And you should try and get yourself funded for at least 2 years, 18 months minimum, but we like 2 years to cover the first, because you're going to generally iterate and pivot sometimes. It doesn't always work exactly as planned, right? No war plan survives the first battle, and we've seen that in a lot of things. So those are the 6 T's. And I would like to say that the greatest entrepreneurs and greatest investors are ones that have frameworks and a prepared mind, but we know when to bend them. So for example, if we'd never done, until we had done a first fintech deal, we had never done a fintech deal. So you might say, oh, they don't know fintech, they're never going to do it. But we did one, and then we did 20, and we've probably done, 30 fintech deals in the world, in history, and a lot of them have turned out very well. Not always, but you got to try new things too. So have a framework, have an understanding of how the world works, what you think the big trends of the world are, have your ethical rules, have a bunch of things, and then know when to, not on ethics, but know when to bend on frameworks.
I think it's an amazing analysis and narrative here, because I think we get lost on what actually investors look for. One thing you said is just ethics is so important. So how do you balance the tension, right? What if the traction is outrageous, but the ethics are not great? It's a clear no.
That's a clear no.
Clear no.
You don't always know.
So you don't bend rules for ethics.
Not on ethics, but you don't always
traction,
know.
You bend rules.
People exaggerate to the point of lying, and we don't always know that ahead of time.
Right.
So that's why background checks are very important. And a great thing we try and do, it's not always easy, but you say, give us your references, but we want some of your references that don't like you, or it didn't work out. We want somebody who had a disagreement with you. We want to know how that worked out. It's not going to be a total black mark on you, but how you get through it is more important than what actually, was the cause of the problem.
And they exist. Don't tell me they don't exist. They exist.
Yeah, everyone.
Yeah,
none of us are perfect. We're all, saints and sinners in one body, So anyway, that's important. But there's one point that you mentioned about what we do, and it's called prepared mind.
Yeah.
And I'm going to give you one of our Blumberg Capital special sauce, one of our little superpowers, and that is this wonderful group of tech executives. They're mostly chief information officers, chief data officers, chief marketing officers, chief technology officers, chief security officers at Fortune 5,000 companies. Some are here in Miami, some are in New York, San Francisco, Chicago, LA, et cetera, and international. We get them together about 8 times a year on each coast, four on each coast, and it's virtual. And we talk about topics of interest to them. What is on their mind? Right now, it's adoption of AI and security for their data, and agentic interactions that they're with unknown companies, and how do they protect themselves, and how do they make themselves efficient at reasonable cost, and how do they not blow up the assets and get embarrassed in front of their CEO. So that's really important. And many times, I'll tell you one story where the 6 T's perfectly aligned, even though it was a very, very early market. And we had help from this CIO council, this this innovation council. We get feedback, and we often bring a company to them before we've invested in a small group, like specialists, or after we've invested, we get the whole group to listen to them, and then they get feedback. Like, oh, your pitch wasn't clear enough, your pricing sounds off, this is amazing, we want to sign up for some, and you get beta sites or customers from that. But I'll give you an example of one that worked and then one that was non-obvious, and it bent the rules, and we still did it. The one that worked was a company called DoubleVerify. DoubleVerify it didn't work on traction. Well, it didn't work. It was super early because the market didn't really exist. This sounds weird, right? Why did the market not exist? Well, DoubleVerify is now a pioneer, a champion, a leader of validation, verification, and monitoring of the advertisement placement of the big brands. So if you're a big brand, Toyota, Wells Fargo, American Express, Verizon, you're putting your ads out on the internet, because before the internet, you put your ads out on TV and on radio and in the print. TV, radio, and print, you could measure exactly where and when those ads appeared, and if there were typos or if there were audio mistakes. On the internet, it was on every screen all over the world. Nobody could monitor that because everyone was looking at a different page. It wasn't like a TV broadcast where everyone was looking at the same thing. So there's no way to monitor where things are going. And the dirty little secret of the advertising industry and the publishing industry, to their everlasting shame, was that 31% of the time, the ads were not going to the right geography.
Wow. Geography, not even the right ICP, the right...
Wrong geography. And the way this company was created was the founder was an ad-serving executive who'd been from Israel, worked in New York, worked at very sophisticated ad serving, moved back to Israel, was sitting reading the New York Times online, and he saw an ad for Target stores. And he said, hey, honey, I think Target's going to come to Israel. They're advertising here. And she said, I doubt it. Of course, the woman was right. And he said, well, why do they advertise here? They knew my IP address. I was sitting in Tel Aviv. That's crazy, wasting money. And he talked to some of his friends in the advertising industry, and they said, that's just the beginning of the problem. Not only are the publishers not either able or willing to police geographic limits and boundaries and targeting, they couldn't really do much. There were also huge problems of adjacency of inappropriate content. So you had Verizon on neo-Nazi and Ku Klux Klan websites, paying them advertising.
Not good.
And the consumer groups were saying, what the hell is going on here?
Right.
And Verizon said, we didn't order that, but they didn't order it, but nobody was enforcing where the ad networks put the ads. Anyway, so this market didn't exist, but it should exist. It was an unknown, unmet, undiscussed problem because the ad agencies had every incentive to just keep it under the rug and, oh, it's minor, rare happens, but it was 31% of the time just on the wrong geographies. Okay, so DoubleVerify came in and showed us this technology that would work. The problem was no customers. So Blumberg Capital, our prepared mind was, well, we can't really test that without helping you get customers. So we took them to a bunch of brands and their heads of marketing and took them to agencies, and we said, let's do some screenshots to show them the problem because it was not known. And we showed them some really embarrassing screenshots of their ads on really bad places. And that was one that finally worked. But they had zero traction, so that didn't work. But it fit the model everywhere else. Great team, great theme, great technology, unique. There was nobody else doing it in the world. So that was one that worked.
I would call that value add. That's
We did
extreme
value
value
add.
add.
Yeah.
It's having an investment firm that has business development chops, that know how to do marketing, know how to go to market, know how to bring their portfolio to customers. And when you have an investor that can also do that and write checks, you have a superpower behind you.
We think so. Can I give you one that didn't work?
That's
and it's
was my next
our
question.
neighbor right across the water. It's a wonderful company called Flex.
Yep.
Moving and storage. And first, the compelling thing was the entrepreneur, Tal Bar.
Flex storage.
Flex storage. Tal Bar, Israeli immigrant to the U.S., is brilliant. He was in one of the most elite combat units as an officer in Israel. He was a top sniper for several years. So he's conscientious, a little bit disagreeable, very open. And those are three traits you don't always find together. But when you do, that's often a great entrepreneur.
Right.
Okay? Because disagreeable, because a lot of people are going to say no, and yet you're going to still charge forward with your problem to solve, even though everyone's saying, you can't do it, never get there. So, but he's conscientious and open. So he's listening for new ways of doing things. He found that when he was in Israel, the self-storage and the moving business was not a good experience for the user. And it didn't fit our model because it didn't seem like it was an AI company, and it seemed it was very physical. And his solution was to make it like the DoorDash of large objects. No buildings. Instead of self-storage buildings, he was going to use trailers. And his workers were not employees. They were gig economy guys with trucks. And the trailer would hitch to the truck, and Mr. Smith, who would be a contract worker for a project for a day, would go out and deliver the trailer, pick up your stuff, move it to a parking lot. And it's ventilated and secured and safe and lighted and everything. So everything was safe, but no building. So that means there was no CapEx for the huge building. And the self-storage business is a multi-billion-dollar, tens of billions of dollar revenue and hundreds of
I
billions
just went through it a couple
market
weeks ago.
cap.
Yes, huge.
And it's usually not a good experience because you have to take the stuff to them. So Flex flips it around. We bring the stuff to you. We take it anywhere you want. If you want to keep it on your property, if you have a big, ranch or driveway or something in a suburb, you can keep it there. You can put it on our parking lot. We can get it to you the same day for picking up. If you put all your ski stuff in a place, you want to bring it for $75, they'll bring you all your stuff.
My friends need that. I have a lot of ski friends, so Flex storage for ski friends.
Yeah. Now, it didn't really fit the Blumberg Capital typical profile.
A little out of the box.
It wasn't software. It was capital intensive in its own way because you had to buy these trailers.
Right.
And so I just the firm turned it down, actually. I invested personally.
Oh, wow.
And then it was growing so fast and doing so well, and the cost of customer acquisition was going down so fast, and the lifetime value, people were doing this over and over. They would say, I needed to store stuff. Now I need to move apartments, and then I need help with this. And so we have all these additional services that link on for lead gen and so on. So the business started doing really well, and they were just in Florida, and then they went to Texas. Now they're in 16 states, and they'll be in 25 states by end of June. Really
Amazing.
fast growth. And the team kept getting better and better. That was another thing. This guy, Tal, had a great eye for talent. And one of the biggest risks that we had identified, and the reason my firm had turned it down originally, was, the financial problems of this company are going to be hard. Buying all these trailers, they're having to borrow against it, and the rates were super high because it was private credit, and we had no history, and nobody had ever done this before, so we were paying out the nose. But it got better and better, partly because we were able to say our best CFO that we've seen in many of our companies is this guy named Aviram from Finaro. They had just sold. He had made some money. He was looking for a new gig. I said, this is an amazing company. You're going to love it. The founder and you will get along well. He came down not only to become the CFO, he invested his own money.
Oh, wow.
Which was a sign. When a CFO,
skin in the game.
Yeah, the CFO, who are very conservative people, is putting their own money to take the job.
Good signal.
Good signal. So that company has just gone on and done thrivingly well. And now guess what? They are an AI company. Because if you're not an AI company, you need to get on the train, on the wagon, because every company can transform themselves to one degree or another. And this company now runs all of its marketing, its customer service, its route fleet management, everything, its marketplace for the workers. All of that is on AI, and very hard for a real estate REIT that owns the self-storage companies to compete. They have software. They don't have software people. They
You can
have
just do how big the REITs are.
people.
The REITs are huge, and so that's awesome. Flex, that's a great one. So they're based here
Based in Aventura.
Based in Aventura.
Yeah, but they're very distributed. That's another thing. We can talk about Miami in a moment.
Yeah.
But
I'll talk about Israel and Miami in a moment.
Not everybody has to be in the same office. I love it. I'd love to see people, but you can have people distributed.
So your
these
portfolio,
days.
you have remote companies and distributed teams?
Many.
And what's your overall take and assessment of those types of teams when they come to you now? I have a team in Tel Aviv, San Francisco, Miami. We're 3 offices.
It's so common. It doesn't really raise eyebrows. We ask them specific questions about how do you manage communication? How often do you get together, as a group? How close is the leadership aligned? Are there divergences? Do you see yourselves going closer or spreading in different vectors? And generally, the engineers can work anywhere.
Right.
And so if they're in Colombia or in Israel or Canada, it doesn't really matter.
Right.
And frankly, if they're all in Silicon Valley, they're really expensive.
Right.
And so we're happy to accommodate an entrepreneurial team that says, what's best for us might be a little different than what's best for another company. And we just listen carefully and try to support them in the best way. Well, here's what the key point is for companies coming from a foreign country. We're open to all of you. We love the rest of the world. Brains are widely distributed around the world. There are a lot of great people, a lot of great entrepreneurs. However, the ease of market entry is here. It may change in the world, but right now, North America, USA, is the best, easiest place to have sales of some new products because it's very competitive here. And because it's competitive, the existing incumbents and big companies have to buy new technology to stay ahead of their rivals. If you go to a different country, I don't want to pick on anybody, but I'll pick on Canada because I used to live there. It's a very oligopolistic or monopolistic, or monopsonistic country. There's 5 or 6 big players in each market. There's 3 supermarket chains. Well, to bang into them, it's really hard. They don't care about competing with each other because they each have a regional dominance. So getting innovation there is harder. Where it's very competitive, you're going to be able to sell new technology. So I urge entrepreneurs that are foreign, come to America, have you can leave your engineers wherever they are, but your sales and your forward deployed facing market team generally should be here.
The macro right now is kind of unbelievable, it seems like. We talked about
Amazing.
AI, being a $48 trillion kind of opportunity going forward, which is, I don't even know how to...
You have good memory.
I don't even know how to process that number personally. Maybe some of my my friends can. But yeah, it just seems to me right now that the U.S. is the place to be for everyone. I'll speak on behalf of Airwallex. I just joined as the head of startups at Airwallex. We just raised $300 million to attack the U.S. And so the U.S. is the place to be. And then shout out to Canada. Toby and Harley at Shopify, unbelievable.
Canadian entrepreneurs are amazing.
We have to find ways to make the 1,000, 1,500, 2,000 other Harleys and Tobys out there successful.
And this is nothing where entrepreneurs are starting from. I'm just saying that the easiest place to get customers and to get your next round of financing, the Series A or B or whatever, that's generally in the U.S. And the U.S. is also where most of the exits happen or the IPOs happen. So again, I love Canada. Say, can you see? No, that's American. What is it, the Canadian one? Oh, Canada.
Our home and native land.
Yes. And so a lot of great countries around the world. And there's brilliant people. I was just in Japan. The magnificence.
Seems like that VC scene is starting to pick off too.
It is.
Yeah.
The magnificence of Japanese engineering precision and their dedication to work and their societal harmony is all to be
Their
admired.
history of technology. Yeah.
Admired, very much. Yeah. So entrepreneurs, bless you everywhere. You're doing fine. But I'm just saying, and it's not for everybody. If you're selling something for the third world market, then yeah, go to Mexico, go to India, go to other places. But if you're selling for the Fortune 500 software, this is generally the place to get easy
Buyers everywhere.
Adoption.
Buyers everywhere. All right, so we've been talking a little bit about the firm. We've been talking a little bit about kind of what we look for in founders. Let's talk about a topic that I think you and I both have a mutual love for, I'd say, is maybe first, let's talk about Israel a little bit.
Sure.
I'd love to hear about how you're operating and investing and thinking through Israel. I think you might have a big event coming up.
We do.
And then over the years, as you've been an analyst looking at Israeli founders and Israeli economy and the market, I've been to a couple of your lectures on the Israeli economy, but maybe just give me your point of view on where's Scale Up Nation going? There's geopolitical pressure, but then the Tel Aviv Stock Exchange and the Israeli shekel does extremely well. I think that the geopolitical pressure is temporary, and I've seen the most amazing resilience. But you're the active investor with an office there. I've been to his office, or maybe it was an older office, but it was bumping. It was a beautiful Tel Aviv VC office. So I wanted to spend my whole day there.
Thank you. You gave my whole talk. I don't need to say anything more, but I will. I'm going to give credit first to one of my mentors, Fred Adler. He was the first and only American VC in the 1970s and 80s who was willing to invest there. And once I sat on an amazing meeting between the head of DARPA, I've forgotten his name, but he was a very distinguished gentleman, and he came up from Washington to see Fred Adler with one question. Fred, you are a very successful venture capital investor in America. Why the heck are you investing in Israel? And Fred, like a real estate guy, said, I have 3 reasons. You know what they are?
Location, location, location.
But he didn't say that. He said, brains, brains, brains. Technical talent was the scarce item. And what Fred had observed was that people at Intel, at National Semiconductor, at the companies of that time, Fairchild, et cetera, were leaving, because of family reasons mostly, to go back to Israel after they'd worked in Silicon Valley, after getting a PhD at Stanford or Berkeley or whatever. And they were going back, and the companies were so at a risk of losing them, they said, we'll open an R&D lab for you there. And it started off in Haifa.
Wow.
Because it was around Technion.
Yep.
And then it started, spreading down to Tel Aviv and all over the place. And so it was that startup. Now there are 470, I think, corporate R&D offices in Israel. It's not because of the lowest cost wages. It's because not only are they
salary
trained,
prices,
right?
Yeah.
Salaries are not the lowest. It's not because they're only well trained. It's because they're very innovative and open. Israel's a tiny society, and people who are physicists live next to a geologist, live next to an electronics engineer, to a software guy, and they get together on the weekends and they chat and they come up with new ideas. So it's a lot of cross-fertilization, a lot of hybridization of different technologies. And it's at that interstitial where you often get a new breakthrough that nobody had thought of before. So that's one part of Israel. Now, I'm just going to do the quick thing because the history of Israel is so long and complex, but over 30 years.
Yeah, I think our listener will probably understand most of the history, but let's talk about the nitty-gritty of 30, yeah.
The over last 30 years, you might say, oh, but they've had inflation, they've had wars, they've had intifada, they've had the COVID crisis, they've had tourism
Silicon
problems,
Valley Bank collapse.
Silicon Valley, they went through the dot-com crisis, all that. But over the last 30 years, consistently, Israel's been growing 2 to 3% its GDP faster than the OECD average, to the point that now, if I give you names of these countries, Germany, Japan, France, England, Spain, Italy, and Israel, guess which one has the highest GDP per capita? Little Israel. It's shocking. It's amazing. And I've been doing this for a long time. When I first went to Israel in the 70s, it was almost a third world country. 1-lane roads, old dusty buses. They didn't have many people didn't have telephones in their house. You had to walk over to this place and put in a simon, which is like a little token. Anyway, it was a very different place. Everything went bankrupt in the late 80s. The 4 banks failed. The government came in and they got religion of free market economics from MIT economists and so on. And they changed the economy to not being import substitution, which was the old model from socialism and so on. And they said, we have to be export oriented. And to compete, we have to compete with Japanese companies and German companies and American companies. We have to be world class. We can't just sell to Israel with protective import tariffs and hide behind that. So they had to be world class. And luckily they had brains and they had openness. And so that combination has really driven them. So now they're experts in software and cybersecurity, especially in defense tech and health tech and agri-tech, many domains that are the necessary things for the 21st century. So we're very bullish. And one thing that's important, if you're an investor in a country like Israel or another country that has problems, be a steady friend. Be reliable. Be persistent. Don't be a fair weather friend that's here today, but if anything problems, you walk away. That doesn't leave a good impression on those founders. We're going to be with you through thick and thin. And you don't have to have wars. You can just have a tough time in starting your company. But Blumberg Capital is the kind of venture firm that's going to say, wait a minute, we're here to help you get through the problems. Now, some problems are not, you can't overcome them. Okay, we have to admit and move on. But most of the time, we're going to be with you, the entrepreneur, fighting on your good days with you and on your bad days with you, not against you.
And that's you want a consigliere, you want a partner. That's an investment partner.
Yeah.
Not to get spicy, but post 10/7,
yes.
did you see bad behavior on that end to Israeli founders, or did you have any pushback on your appetite to continue to invest in Israel from LPs or anything like that? Was there any scuttlebutt?
Our LPs were solid. They were great. They were great. Our entrepreneurs were amazing. My team in Israel, Yodfat, and the whole team there were just
unbelievable,
amazing because they helped not just on the business side, but on their personal side, like how they were doing as a family. Did they have enough toys for the kids in the bomb shelter, stuff like that. And we sent, gift baskets to people and just to cheer them up and say, hey, we're with you, we remember you, and we admire you, because there's that. And I think the geopolitical situation is turning around so well. This is going to be the golden dawn, not only for Israel, but for the whole Gulf, and even for Iran. This is going to work out very well. And I'm making a bold prediction here. Oil prices will be going down solidly. America's strength in the world will be seen for what it is, deterrent power, and less wars will start, because people will start to say, if they do that for Venezuela, if they do that for Iran, we better not mess with them. And so that's going to be, I think, a good thing for the world. I think that Israel has defeated most of its proxy, fighters, the Hezbollah, the Hamas, the Houthi, the Iraqi militias, whoever was sending rockets over. That's going to be pretty much gone. So Israel will have a safe terrain for the first time in years, and then they're going to be seen as doing kick-ass on the military side. So they're going to sell a lot of stuff to places like the Gulf.
I'm a full believer, and maybe patiently waiting for the GCC to fully open.
It will.
The region,
It will.
Saudi.
Abraham Accords will expand. Very, very positive.
It's a quality of life thing for the whole region,
Yeah.
not just an economic thing. And moving oil easier, moving goods easier, moving laundry machines easier. It's just like, it's the kind of bare bones stuff that I think is coming, and God willing, it will all work out. And maybe there'll be a Blumberg Capital Riyadh one day.
Well, I've been to the Gulf. I haven't been to Saudi yet. I've been to UAE a couple times, and I've been to Egypt and Jordan and other places. And they want a lot of the same things we do.
I believe so.
And I think Israel will be another Dubai, if I may. If you've been to Dubai, you know how amazing it is. And I think Israel has all those capabilities and some different ones. Israel has this entrepreneurial, incredible culture there. It's starting in Dubai, but it's not quite there. But those countries are going to enjoy an era of peace, and they want to help the world. Each of these places wants to do good things for everybody
I would
else.
love the best Florida, New York, and Emirati developers to go build up Israel. And it's like, we need new housing, new buildings. Let's go do that. So long Israel. Can't wait to meet more Israeli founders.
But I'm going to do one thing that was maybe counterintuitive to you.
Please.
I always say I'm a investor in Israel of the mind, not necessarily the heart.
So does this leave your passport? Does this leave your heart at passport control?
I'm a Zionist. I believe that the Jewish people have a right to a homeland, et cetera, et cetera. Even all that, that's great. And I think it's a wonderful place to live. However, when I'm investing there, I'm not investing emotionally. I'm not investing because, it's a nice thing for Jews or fellow Christians or Hindus or whoever loves Israel to do. I'm doing it because it makes business sense, because I've evaluated companies in the US and Canada and France and England and Israel, and this particular company in this particular market at this particular time happens to be the best choice.
Yes.
Because we have a fiduciary duty for our investors. We can't be investing out of emotion,
Yes.
either hatred or love. We have to be rational investing. And so we're trying to make these decisions in a very clear-minded way that I say, I leave my heart at the immigration counter when I go to Israel, because I'm trying to say, I might love you, but I'm not going to invest in you because I don't think your market is going to succeed.
We need institutional discipline across the venture industry. Institutional discipline, real diligence, really understanding what you're investing in, and by the way, it's a long hold period. It's not like a quick thing.
That can happen also, locally. Like if I have a friend comes to me, sometimes I have to tell my friends, no, I love you, but I'm not going to invest in that company for a variety of reasons.
So you moved here from the Bay Area. Now we're sitting in Miami. You've written a little bit about kind of the corridor, right? So from Jupiter down to Miami, not just focusing on Miami, which I live in and it's great, but there's a huge corridor here, up all the way to Jupiter, even further, the Space Coast, I would say.
Indeed.
So what's you moved here. How's life in Florida? What do you view as going on here, and how should the world think about this region?
Thank you. It's a great question. I love to talk about this because it's so important for people, especially people. I'm talking to you in government. Do the right thing for your people, please. Otherwise, you cause people like me and a lot of other great folks, I'm not saying I'm so great, but a lot of people like Elon Musk and others, to leave dear California. I'm a fourth generation Californian. My ancestors helped build San Francisco, companies, institutions, nonprofits, all kinds of things. And we had to leave. It's so unhospitable to business, to different diverse points of view. And so we just said, we're out of town, out of Dodge. Now, you mentioned Miami, but you also mentioned Florida. Most policy is done if not at the federal level, at the state level, that it really affects us. So tax rates and regulation generally, there's some local stuff that's imposition and so on, but most of it is at the state level. So I want to give huge kudos to the way Florida has been run for the last 30 plus years. The schools have been getting better and better and better and better. The tax rates have been going lower and lower to zero. The infrastructure is strong and getting better. Could it be better? Yes. Always infrastructure can get better, unless you're maybe in Saudi Arabia where
that's also a federal government problem
infinite
too.
money. Yes, there's federal and state. But what I love about Florida is that it has this can-do, pro-business, pro-diversity attitude that is just infectious, and people are happy here. Partly because half of the people in Miami at any given time are tourists, and they're on vacation, and they're happy.
You see smiles. You see a lot of smiles.
Smiles, and it's warm, so you see a lot of skin, and it's a lot of water, and it's nice. So that's all good. I think we're going to go from strength to strength. Why? Because more and more smart, well-capitalized, interesting, ambitious people are moving here all the time. And again, a lot of it is due to bad government decisions in other places, whether it's Latin America, and then there's a bad election or a revolution, a lot of great people end up here. California is losing a lot of great people to us now. New York is losing a lot of great people to us.
And sadly, it's getting violent for AI founders in San Francisco. You have Sam Altman there's people trying to assassinate him. God forbid, chas v'shalom, this horrible thing.
Of course.
Dangerous.
Well, that was part of our consideration of why we left in 2020. There was the riots in 2020, and we saw that they were tearing down statues and doing all kinds of looting and stuff all over San Francisco. My car, driving our kids to school, was attacked not once, but twice.
Oh my gosh, that's scary.
By drug-addled, crazy, folks in the street. And I don't blame the people, because it's the system that helped their drug problem get worse, not better, but they're there in quantity. And so anyway, a variety of reasons, we didn't want our kids locked down for another year, and so we moved to Florida, and it's been a great move, really great move. And I love California still.
Kids love it?
I want it to get better. Kids love it. They prefer the school here. It's outstanding.
Amazing.
And the schools are getting better. There aren't enough great schools, but Florida's doing a lot of school choice.
And do you feel as an investor you can go to dinner and meet people interesting and you're networking, or do you feel like that's still in California? Do you feel like there's a gap here?
I am not short for intellectual stimulation.
You're not short for
no, nor cultural stimulation. And we're going to this.
That's very important, because I hear that there's no intellectual stimulation in Miami. There's no culture. I reject that.
Bogus.
I rebuke it. Bogus.
Bogus. It used to perhaps be the case. I don't want to be so arrogant to say that Florida 30 years ago had no intellectual stimulation. I'm sure it did. I don't know. If you would have asked me 10 years ago, would I find myself and my family in San Francisco, in Miami? I would have said, you're crazy. COVID happened. COVID changed a lot of people's minds about a lot of things. It forced us essentially to move, because we didn't want our kids to be locked down like Zoom zombies for another year. And Florida schools were open, and we knew that there were no deaths of children to speak of.
Right.
And so we said, this is safe. Let's go to Florida. And we found remarkably intelligent, intellectually stimulating, diverse, friendly, helpful neighbors. And I think there's a specific reason. I think that Florida has been home and recipient to welcoming to so many waves of refugee immigration. Cuba, Argentina, Venezuela, many sets of people have come here before us, and they are welcoming. And it's very nice.
And quite entrepreneurial.
And very entrepreneurial, and they give back to the community. So there are incredible cultural institutions that are being built. We're going to the New World Symphony, combined with the Miami Ballet thing next weekend. And it's very high quality stuff. So you will not lack for the arts, you will not lack for schools, you will not lack for intellectual stimulation around the dinner table. And the beaches are fun, and the water's warm. We can swim every day of the year.
Every Sunday you'll find me. I'm gonna be there. I got to do my dip. So we're bulls on Miami, bulls on Florida, the state, the geography, and the Space Coast, and up the coast.
I thought of something, and this morning as I was in the shower, I was thinking about what's a good soundbite for you. So our big road on the coast is the A1A.
Yes.
Right? A1A, that's the big highway. I think we should call it the AI Highway.
Governor DeSantis, if you're listening.
AI Highway.
I love that.
We got Vanderbilt University's opening graduate schools in West Palm Beach. University of Chicago, not Chicago, which one?
Carnegie Mellon.
Carnegie Mellon
is opening in Wynwood, apparently.
Here in Wynwood. Okay, amazing. We have an advisor, Jake Cohen, who was dean at MIT of the Sloan Business School. Now he's dean of all adult education, executive education at Kellogg Northwestern. They have a campus in Coral Gables. Somebody else is in Coral Gables. Georgetown is opening in Coral Gables, business school. So we've got a lot of great stuff, and it can take not advantage only of local people in the Miami area, but we get all kinds of folks from Latin America who want to come up for a weekend, for a week, for a month, for a year.
The asset owners here, they own property here, they come here, they live here, they have businesses here.
And they can easily fly back and forth if they need to run a business during the week, come here for weekend course studies, whatever, adult executive education programs, very doable. And it's fun and it's beautiful year round. So the weather is great.
Love it. I'm a bull, and I think we're going to be proven very prescient about our choice to come here and build here.
Palantir's just moving here.
Palantir is a big one. I see Palantir also giving grants out to high school students here in South Florida for their projects. If you have a $10,000 grant from a Palantir as a junior in high school, I mean, that's top 1% stuff. And so that's pretty amazing.
I'm going to jinx it. My son's applying for one of those
right
now.
I'll maybe wink, and we'll post that. It's a great company. I'm a big fan of Palantir here.
And can I just brag on that for a bit of it? Because AI is not remote in distance. AI is something you can use today. My son, who's a very smart kid, but he's not an engineer.
You give him keys Anthropic?
He's a junior. He has Anthropic, and he built something called Aegis. I forget what it stands for, but it's about event prediction for conflicts. So it takes in open source data, and he doesn't even have, of course, access to confidential, secret stuff that the CIA or the Defense Department would have. But he has got this stuff which, predicts escalation of conflict through troop movements and money flows and violence flaring up. And that was, he helped build that with, or he built it with the help of.
I need a bookmark of that so I can have that as my monitoring the situation.
Yeah, it may help on stock trading and a bunch of things.
Okay, that's Aegis.
Yeah, I don't think it's open for public
yet,
but I'll get
we'll publish
I'll
this
get a special beta site for you.
Sounds good. All right, so we've spoken about the firm, we've spoken about your investments, we've spoken a little about your criteria, your background, Miami, Israel, Florida. Let's just end up with a few words on where you think the world is going right now. Where's David going? Where are you spending your time? And then I'll do some rapid fire as we quick up. But
sure.
How do you want to kind of tell the world about David Blumberg over the next couple of years?
I'm going to quote Martin Luther King first, because he was asked at one of the darkest periods in civil rights struggle. I think it was in Birmingham, and I forget exactly where, but he was asked by a young person, Reverend King, if you could live in another time and be with Moses or Jesus or Leonardo da Vinci, Napoleon, what era would you pick? What is the best time to be alive? Without flinching, Martin Luther King said to him, young man, the best time to be alive is right now, right here. So not only was that a tough time, but it was a tough place to be. And for, of course, black folks at that time, it was very tough to be in the South there as well. All those three things he said, no, because things are getting better. There's an arc to history, and it's moving forward toward progress. And I believe that so strongly. I think we are in an unprecedented age of abundance, not for everybody yet, but we're going to get there. Poverty, as defined by the UN, has declined something like 90% in the last 30 years, mostly because China and India raised themselves up. Not fully, not perfectly, not completely equitably, but largely, okay? And some of the worst misery has gone away. But as I said, we still have 700 million people without energy. We need to build a lot of power plants, frankly, around the world. That's one of the biggest things that will empower, literally and figuratively, people to move
I would
up.
love power plants in Florida, not in Mississippi, Alabama,
Yes,
and Georgia.
Indeed, and data centers.
And data centers.
We can do it all. So we need to have guards. I'm not saying zero regulation, but generally in almost every realm of life, we have too much regulation. And I'm going to explain something that most people don't quite understand. Most regulation is not done for the benefit of the consumer. Most regulation, because the way Congress and state houses work, is done for the benefit of the incumbent businesses that don't want competitors.
Right.
As an entrepreneur VC, I am all on the side of entrepreneurs who are disruptors, going to challenge the status quo, make something better, and maybe cause prices to go down because they're entering a new market. Well, the incumbents don't like that. They want to keep their little white picket fence around what they have and guard it jealously. And they do it much of the day these days by regulation. In the old days, in the Middle Ages, it was guilds. And if you weren't a member of the guild, you could not be a silk weaver or a dyer or a tailor or a sandal maker. You had to be in the guild. That's the way they protected their market. Now we have regulations that do similar functions. I'm against all that. I want competition to be the metric by which we judge, and meritocracy to be the way we fight with each other,
100%. I mean, in schools too, not just in business.
Absolutely.
It's got to be, merit driven. And I know we've talked about that a lot in the past. And thankfully, we're in the venture capital and entrepreneurship business where you can kind of look at the numbers and look at the P&L and understand who's doing well and who's doing not well.
And to that point, and again, America has been so great, to your family and my family, most people here. Most of our ancestors came either as refugees or slaves or impoverished. Very few people came here with a silver spoon.
Royalty.
Okay, there were very few. They stayed where they were because life was good. Good to be the king. But most of us did not come as the king. We came as the paupers or the slaves or the refugees. And this country has had so much social mobility, right? No matter what you are, whether you're black in America, whether you're gay in America, whether you're a woman in America, generally those groups are the best off of any place in the world relative to their peers. And there's some exceptions, and I'm not saying other countries aren't great. There are some other great countries around, but this country has not perfect at all. And I'm trying not to dilute the fact that we've been racist and misogynist and have a lot of problems, but we've generally overcome a lot of those struggles to the right side of history. And I believe in that, and that's why, yes, what am I doing? Another part of my life,
America 250.
America 250, and I'm the chairman of something called PragerU.
Very important.
Called Prager University. It's not a full university, but we make 5-minute videos to try and help Americans understand American history, American civics, free market economics, human rights, environmentalism from what I would call a free market point of view. And we make these things that you can watch on videos, and I hope you will, because America is an amazing country. It's an exceptional place. It's not perfect. We have a lot of challenges to still overcome. And yet, I don't want to throw the baby out with the bathwater. If we trash our country, where else are we going to go? Where else is that much better? I don't know. We have to fix this place, but we don't have to throw it out and completely trash it. So that's what PragerU does. That's a lot of my free time. I'm active in politics. I'm active in other philanthropic endeavors here. Again, to much who has been given, much is demanded in terms of responsibility. So I feel an honor to participate in helping build up the Miami community, building up other institutions, schools, et cetera, and trying to make change in a positive way, because again, I plan to leave the world better than how I found it.
I mean, knowing you're absolutely going to do that, and I'm hopeful to be part of that as you pursue this over.
Any day, brother.
Thank you. So let's finish up here. Let's do some fireball, rapid fire questions.
Ready.
And get up. So you're moving from San Francisco to Florida, and you're a founder that just raised a $10 million Series A. Where do you move? You go to Brickell, you go to Boca, you go to Aventura. Where would you, if you had a founder asking you that, where would you want him to go or her to go?
I'm an equal opportunity lender.
Wherever they want.
I don't want to discriminate against any region. I think most young people are going to gravitate toward the city center, Brickell or Wynwood or Midtown, those areas. But look, again, West Palm is on the rise for sure. And there are people who can make it anywhere. It depends partly on your family. If you have kids, that's a different thing. And the best advice we got was find the place you're going to want to put your kids in school and then buy a house there.
Right.
Now, if you're single, young, don't have kids, then your choices are a lot more.
I live in Brickell.
Open. And he's the king of Brickell.
Zolly's over there, maybe. Who is a founder that the market is sleeping on right now that people should know about, that is top of mind for you, that you want to give a shout out to?
God, we have so many. I'm going to give two, if that's okay. Tal Bar, Flex, who's local. And then let's flip, because he's an exceptional person. He's dedicated. We're going to write business school cases on this guy, okay? Because he had a vision, and as great as his vision was, as awesome as his execution is, neither he nor I, the entrepreneur team, nor the VC, were smart enough to figure out that, oh my gosh, the moving business is even better than the storage business.
Right.
And that's what's now taking off in an insane, accelerating manner. This is going to be a decacorn.
I love it.
I'm going to put that little out there. We'll see how it happens, but I think it's going to be a decacorn company from Miami, to the world. Now, another one. Let's go all the way over to Utah, Silicon Slopes.
Yep.
Beautiful area. You can ski. You can, have a great
part
family
of the country.
life.
Yeah.
And the people are honest and hardworking and really diligent and patriotic. It's a wonderful place to be. There's a company there called Angle Health, full stack health insurance company. They're guys who came out of Palantir, okay? Super technical, smart, analytical data people. And they underwrite beautifully, like remarkably well. So their underwriting is so well that they can sell to a small business. They generally target companies that are under 200 employees, but they underwrite your whole group.
Wow.
So all 50 of your employees, 70 employees, whatever. And they've grown so fast. They went to Utah first because it was one of the best places to get an insurance license for medical insurance, because each state by state is different. Now they're across the country. They're growing really fast. You'll flip when you hear the numbers. In 4 years, they've gone from 0 to 650 million in premium revenue.
That's amazing. That's great.
Pretty good. So
we'll make sure
Ty and Anirban, the team, good job.
We'll make sure to get the link on the bottom of this post here. Awesome. Last main question for me. You're hosting a Shabbat dinner at your home with your family, and you can invite 3 business mentors, leaders, dead or alive. Who would you think that you would want to have exposed to your children, exposed to your family, and have at your Shabbat dinner table at your home?
Amazing question. Okay, this is really fast. Benjamin Franklin, Henry Knudsen, Henry Kaiser, from the World War II, helped, and Knudsen also would be good. He was GM, I think, and Kaiser was the shipyards. They helped save the world in World War II by turning America into this manufacturing powerhouse. There's a shout out to a book by Shyam Sakar from Palantir.
Yep,
That's
CTO.
The CTO.
Yeah.
It's called Mobilize. I'm reading it right now. It's awesome. It's about how America had its mojo. We maybe lost a little bit of mojo because we outsourced way too much to other countries, especially China. And we got to bring some of it back. But we have the guts, we have the capital, we have the know-how to do it. We need the right policies, we need the right incentives, but we're going to be able to rebuild and onshore and so on, a lot of our manufacturing capacity. And then for today, I mean, it's hard to not have Elon at the table as well.
I think Elon would be a great guest at the David Blumberg Shabbat dinner table. We'll make that happen.
You're all invited. It'll be hard to get Fran Franklin and the other guys because they're passed away. But Elon, you're vibrant, you're alive, and let's have a debate on that. What is it?
Universal basic income for AI replacements or whatever. Yeah. David Blumberg, thank you so much.
You're the best,
awesome.
Michael Morgan.
Thank you so much.
Thank you.
Thank you, everyone. That's the playbook, and we'll see you next week.